been introduced as farming. We have farming, we have soft staking, and we're going to have yield farming as well. So these ones are yet to be introduced to the market as the roadmap continue to unfold. And under the Alya Finance, we have the mining currently active. And these are the 6 major projects that the ecosystem is focused on. I said 6, but on the screen you see 5 with much more. That's because the first 6, we have the AI trading bot, which is the artificial intelligence trading bot. This trading bot is designed such that it does trading on margin and also on futures market, not on spot. Because on spot market, if mostly you look into trading bots that are in the market, it can only take profit when the market is bullish. That is when it is on spot market, because on spot market, you can short market. But then with the Alya AI trading bot, you can long the market, you can short the market. And the interesting thing is that it is an algorithmic. It is not a quantitative bot. A quantitative bot is one that has only one direction and can only execute based on certain parameters that has been encoded by the user. But algorithmic bot has a mind of its own. It can reason with the market and it can do its own analysis and execute. And it also has a copy trade functionality. But why am I stressing on the AI trading bot? That is because it has a direct correlation to the Alya token, which one way or the other, I would say that once that bot is launched, the Alya token price valuation can never, and I mean, can never be as it is of today's value. Why am I saying this? The AI trading bot is going to be free for all users. I believe this one hit somebody on the call. It's going to be free for all users. But the interesting bit of it is that whenever the bot makes profit for a user, there is going to be a percentage that goes into the Alya ecosystem as commission. So for instance, it makes a profit for you, which is 100%. You've not paid for the bot and you are charged 30% of that profit, meaning you are making 70% as your profit. And this is a bot you didn't buy, you didn't pay for. The question is it a good deal or is it a bad deal? Of course, for me, I see it as an awesome deal. So we are looking at this bot creating a lot of adoption. We are looking at the bot creating a lot of adoption. And the interesting part of it is that that percentage that the user is going to pay after the bot makes profit is going to be received in Alya tokens. So you cannot pay that commission using USDT or using USDC or using Teacher USD or any other stable coin. Nonetheless, any other volatile asset like Bitcoin or Ethereum or Cardano, whichever, you are only supposed to make that payment from or the contribution from the profit using Alya tokens. What it means is that there's going to be a demand because for as many people that are making profit, they are going to need Alya tokens to pay the commissions. So it means that Alya tokens has a serious use case, even with just the trading bots. Now, aside that, there's going to be the Alya swap, which is anticipated to be on other mainnet projects aside Binance Smart Chain. Why that is emphasized is because Binance Smart Chain, as it stands, has a lot of swap dexes. And once the market is saturated, hardly will you be able to make your mark, especially when people are yet to get to see about the project. And so one of the strategic moves is to build the Alya swap on other layer blockchains like Solana or Avalanche and all the other. So this is also under consideration with respect to the developer team. And there's going to be the Alya exchange. And of course, the Alya swap, the fees are going to be in Alya token. The Alya exchange, which is going to be a centralized exchange as part of the roadmap, every transaction fee is going to be charged in Alya token. So these are multiple use cases to the Alya token in the open market. And we have already seen the maximum supply that can ever exist. Aside that, we have the Alya wallet, which has multiple value as compared to regular or standardized wallets in the open market. Some of these values are price tickets in respect to APIs functionalities where you can have multiple uses to the wallet other than just having a regular wallet to store your funds. And of course, the Alya Care, which I made reference to. So these are just about a few things that are currently under development on the Alya ecosystem, including which in the future perspective, we are looking to have some of this gamification, which is under the Alya fund, some of the gamification activities which would evolve into NFTs and also into the metaverse, which is part of the developmental project on the Alya ecosystem. Moving forward, coming back to the Alya mining, I made reference to the fact that there's going to be 65.27% locked away in mining. And we're going to look at mining quickly. I think some people's microphone are open. If we can kindly mute them. Okay, thank you. All right, so we have the Alya mining, and it is designed according to the Binance blocks. So let me take that again. The mining is designed according to the Binance block, which means this is completely decentralized. The developers of Alya, because they much and the other developers cannot also get to know the transaction hash of a particular block height. It's not possible in blockchain. And so that is the nature of this protocol under which the mining is designed. Now, for the first period, we are anticipating to mine a block of 0 to 300 blocks because the Alya blockchain mining is designed on 1,500 blocks. Somebody would assume 1,500 blocks is just about a day or two activity, so mining would end. No, the nature of this block mining is designed on specifics of a block height. So there are certain blocks that will be generated in 30 seconds, in 5 seconds, but then it would not constitute to the mining because that is going to be a bit technical, which I believe we can look into if we have time. But then in the first period, the anticipation is in a year when you are looking at the traditional calendar. So what primarily we are looking at within the 5 periods, which is a blockchain language, in the traditional sense is going to be within 5 years. So we are looking at mining that is going to last for 5 years. Now, the first year, which I'm just borrowing the traditional language. So the first period, which is of course the first year, we're going to have each block that confirms on the Binance Smart Chain, releasing 58,000 Alya tokens to miners. So a total of 17.4 million tokens, which is of 300 different blocks, are going to be released in the first period, which is estimated to be the first year of the mining. And the second period, we are going to see 81,000 tokens released from each block, which starts from 301 block to 600 block, and it continue like that to 1,500 blocks. But let's pay attention to the reward in each block because it's very important. One of the awesome stuff I've seen so far in blockchain is this particular protocol, which is a reverse halving technology. Mostly mining emphasizes on halving. For those who are exposed to Bitcoin mining would of course be more familiar with the term halving. So halving primarily means that at some point, the protocol rewards reduces the reward by half. So those that started Bitcoin mining, which I happened to have the opportunity, but I didn't really understand much at the time, was not really taking it serious. I was also mining Bitcoin. But then at that period, Bitcoin was releasing 100 tokens per block. At some point, it slashed down to 50 after the 4-year period of the halving. The next 4-year period, it slashed down to 25 tokens per block confirmation. So that is halving for those who are new to halving. But then what Alya has done is that in each period, there is rather the reverse of that activity. So we increase the reward by a margin, which is about 40% of what the previous period gave. Why is this so? Somebody might be wondering, then this is going to increase too much supply because if we are making more returns, then there will be more supply in the market. So why is this very important for us to have the reverse halving? Primarily, the minimum that one can start mining, there are 2 levels of mining. There is individual mining, there's pool mining, which we will get to understand why there is the need for the reverse halving protocol. So the individual miner, you can start mining as an individual without any Alya finance. You can do it on your PC, on any device that has a good processing power, that you can upload the software of Alya mining on that, and you can start mining. But when you look at that, you need a minimum of 500 Alya token to activate the miner. That's one. The next thing is that you need to have technical know-how about how to confirm your transactions. So let me just go to that side and use this part to explain the two, so it becomes more easier. Before I continue, kindly type 1 so I know we are still in sync and I've not left anybody behind. Please, if you can still see my screen and if you can still hear my voice, kindly type 1. If we are still connected, kindly type 1 so I know we are still together. Awesome. Thank you for your feedbacks. Really appreciate it. So there is the individual mining and there is the pool mining. I skipped those slides because they are mostly literature, and I want us to look at the differences so we can move on and progress faster. So the individual mining, you need a minimum stake of 100 Alya tokens. And when you look at the technical side, yes, you need a technical device. You also need security. In fact, you need to secure your mining because that will not be under anybody's control. It's more or less like having a decentralized wallet. You don't seek seed phrase from anybody. When you lose your seed phrase, your funds are gone for life, primarily, and nobody can restore it because that is how blockchain is designed. So on the individual mining, you need to have your security. And on the individual mining, it takes eminence of proof of active consensus, which means with you mining as an individual, you need to be actively present to confirm the transaction before the reward would be released. For instance, a block has been confirmed on the Binance Smart Chain, and the confirmation which you need to sign as a transaction pops up and you're not available. Because it is mining, that reward was kept to the next miner. So one way or the other, as a miner, you need to be very active with this particular aspect, else you lose your reward. But then aside that, you also stand a chance to making 100% of your reward. That is if you are actively mining. So you don't lose anything to anybody, you don't give any percentage to anybody because you are fully involved. And with this, you cannot increase your stake from 500. It is 500, and if you want to do another mining, you need to put another 500 in another miner. So these are some of the differences on the individual mining. Then we go to the pool mining. The pool mining minimum you can mine is 100 Alya token. Now, this 100 Alya token, you can increase it at will. There's no limit. Can increase it whenever. You don't need any technical device. You don't need to have any extra level of security, or you need to still continue to have your wallet. That's all. The next thing is it also participates on the proof of active consensus, but then you don't confirm any transaction. All you need to do is to start your miner, go to sleep, and the mining continues mining, right? Now, why is it that on pool mining, you don't need to sign transaction? That's because on pool mining, it is a design structure under Alya finance, which is being maintained by the developer team on my is open, which distracts me a bit. All right.
You can mute.
Sorry, I think I mute. Guys, kindly give me a second. Let me unmute. Okay, let me ask Kate to unmute because he cannot be muted. Awesome. All right. So that is the individual mining, and you notice that the monthly reward output is 25 rewards on the pool mining. What it means is that within a particular given month, you are expected to make 25 different rewards from 25 confirmations. So when I say 25 confirmations, I mean different levels of rewards. So that different level of reward also depend on you as an individual based on your mining volume. So I can have 100 Alya token, and I can have maybe 1 Alya coin as my reward per each confirmation. But then somebody can have 1,000 Alya token and can have 10 tokens per reward from each confirmation. And so that is how it is. And on the return on investment, you notice that it's 75%. Why it is 75% is because with individual mining, for every transaction you sign, you pay transaction fee on Binance Smart Chain. That is to say that you pay BNB fees, because the project does not control Binance. They don't control Binance Smart Chain. It is only built on the ecosystem, the network of Binance Smart Chain. And for that, once you are running it as an individual, you pay those fees yourself. But for the pool mining, you don't pay those BNB fees. Hence, those fees, including those handling the mining on your behalf as an investor, takes their percentage from that 25%. And one of the key reasons is that there is also a structure on career and referral bonuses. Why it is important is to ensure that the project can have a solid ecosystem backing it. And so for people who are assisting the ecosystem growth would have to be compensated, because if there's no motivation, then why should I even help you build your ecosystem? It doesn't really add up. So that's why those level of compensation falls within that 25%. Hence, once you are doing pool mining, you forfeit 25% of your rewards. So it is important we pay attention to that. And which, of course, this side, I've already made reference to them. So let's quickly move on from here. And so this is the compensation structure, which mostly I am more technical inclined. So the compensation structure, because it's a uni-level plan, whether I understand it fully or I don't understand it, the system is designed to pay me, because it pays not from what an individual mine with, but what the block confirmation does. So let me explain it in a different language. For instance, I refer my brother, Coach K, and Coach K decided to start Alya mining with 10,000 Alya tokens. I don't get referral commissions on his 10,000 Alya token. Why I don't is because at the end of the mining period, which is designed within 6 months duration, so after every 6 months, you can choose to continue mining, or you can choose to trade your coins, or you can choose to do whatever you want to do with the coins actually. So after every 6 months, the mining ends for a particular cycle. Now, because he has brought in 10,000 Alya tokens into his personal pool mining, and I'm the one that introduced him to Alya Finance, I don't get commissions on his 10,000. No, that would be a cheat, because at the end of the day, if they pay me from his 10,000, when the 6 months is up, how will he get his full compensation? That is how come it will become a cheat one way or the other. So what this referral structure does is it pays you commissions, that is referral commissions, from every time that the block confirmed. That is to say that from the person I referred, which is in this case, Coach K, I'm going to receive referral commissions from now to the end of the mining period, which is 5 years. So every single time there's a reward, I'm going to get a percentage of that reward as referral commission. This is an interesting and a very serious compensation plan, which one way or the other is designed to ensure that the ecosystem is stronger. And so in this case, if Coach K has started his mining with 10,000 Alya tokens, and he's making, let's say averagely he's making 1,000 tokens at the end of the month. What it means is that I will be earning 6% of 1,000 tokens, which is not going to be taken from Coach K's reward. It is going to be from the mining from each block. That is how come it will keep paying me until the mining is over within the next 5 periods. And so that is how the compensation is designed. And I think personally, this is one of the best compensation structures I've ever seen. Now, going forward, there is a career plan. Now, the career plan is such that the ecosystem has set aside, because you need to always have leaders in ecosystem who would foster development in terms of synergy, in terms of keeping the community together. And you cannot just have such class of people when there is no motivation, when there is no compensation. And so the protocol has set aside 1.25 million tokens for career plan. Hence, for those who work within the career structure and hit the career bonuses, would earn from this pool within the period of the mining. So this is more or less like extra compensation for their hard work. And the career plan starts from starter and it goes all the way to ambassador. Now for starter, you need an average of 500 Alya tokens as a personal mining volume. And you need a team volume of 5,000 Alya tokens. And so I believe once we get this slide, we'll be able to walk through it. And also the share bonus is 2% in that one share of 2% from the rewards from the 1.25 million tokens. So that is the ecosystem of the Alya project. Now I'm going to end the slide here and I'm going to share a few things on the token economy, which I believe is going to be one of the integral parts of why this presentation is important. So I'm sharing CoinGecko now. So please, if you can see my screen on CoinGecko, kindly type 2. If you can see my screen on CoinGecko, I'm opening up the Alya project. If you can see my screen, I have a few minutes to wrap it up. So if you can see my screen, kindly let me know. Kindly type 2. We have a couple of people, but I'm having a few responses. So I'm not too sure if everybody can see. Awesome. All right. So now when you look at the project, this is what we have. We have so far 194 plus million tokens as maximum or as total supply. But remember, the protocol is designed to have a maximum of 205 million tokens. So the question now is, where is the remaining volumes? It has been burnt. When the project launched on PancakeSwap, 5 million of the tokens were burnt. Now, out of the 5 million tokens, when it was listed on MEXC, 5 million was also burnt. That means we burnt already manually 10 million tokens as part of the project design. And currently we have 194,130,419 tokens. What it says is that we have burned a total of 10.869 million, which means that the manual burn which took effect on 2 consecutive times burned 10,000 tokens. So the question now lies with, where is the remaining 869,581 tokens? Those burned tokens was as a result of the daily transactional burns from the auto burning feature. So we want to go into the scan. I believe for us on the call, we are blockchain inclined. So we want to go to the scan, which I would then treat everybody after the call to do their due diligence. You'll notice that there's a null wallet. If you see a null wallet here, this transaction was done 55 minutes ago, and that's the transaction hash. When you open the transaction, you notice that there is a null wallet, and this is a burn wallet. This is the auto burn feature, which is reducing supply almost per every single transaction by 2% from a transaction fee. Now, when you open the null wallet, you notice that so far since the project started, which of course we are very early, we have a total of 29,749 transactions on the burn wallet, which means that much has already entered into the burn wallet. Now, when you come down here, all of these tokens are burning out of circulation. All of this, we have about 1,190 pages of burned transactions, which you can take time and go through them. And this volume constitutes the 869,581. Now, remember, we have a circulating supply of 4.7 million tokens. And the burn is not from the on-mine token, but rather from circulating, because it is burning on auto transactional basis. So every transaction burns a part. And so in that sense, if we burnt, let me just pick a pen and put this figure down before I mess it up. So we burnt 869,581, and we have currently 47,11180 as circulating supply. What it means is that the tokens that have been burnt is from the current circulating supply. Hence, the circulating supply on the block itself, which is to say on-chain analysis, would not be 4.7 million, but rather 3.8 million tokens in supply. Now, this is an interesting concept the project has considered, and I believe is one of the major blockchain projects I've seen in this particular bearish market. And so what I would say is let's pay attention to it. Another thing that I will wrap up with, because we don't have much time, I cannot go to the pool mining to exhibit a couple of things. When we go to the holders, this is where it gets interesting. The first two holders wallets are smart contract addresses. The first one is the Alya token, which is verified by CETIC, telling us that there are no backdoors. And 71% is logged away in that smart contract. The second holder wallet is PinkLock, which is under the control of PinkSale. The developers of Alya don't have any control. And under that, 22% plus is logged away, which tells you that what they are building is completely decentralized and there's no autonomy on the project. And so I want to wrap up here. On the PinkLock, that is where we have the airdrop tokens, we have the developer team token, which is vested for 5 years. We have the marketing token, we have R&D tokens, we have marketing token. So all of those tokens are logged away in PinkLock, not under the control of the developer team. So for me, as a blockchain enthusiast, when I saw the project, I was so much enthused, and I noticed that this is one of the solid projects that has complete decentralization in terms of the tokenomics. And hence, I decided to give it a shot, and I've not regretted since I started over a month and 2 weeks now. So I would have my presentation here. There's a lot that could be shared, but I cannot take all the time. Hence, I would want to say thank you to everybody who made time to listen in on this presentation. And I really appreciate the time.
Thank you so much, Mr. Lambert. Thank you so much. Friends, please, if you have any question, please quickly ask your question. Yes, Mr. Gode, ask your question because we are moving into the next session in another 2 minutes. Let everyone ask their question now. Please unmute yourself and ask your question, Mr. Gode. Thank you.
Yeah, I'm unmuted myself. I want to ask. I really listened from the beginning of the stuff. You understand? I said, what is the price prediction of this coin from now to the end of this year? Hello, did you get me?
Yes, your question is clear, Mr.
Hello, can you hear me?
Yes, we can hear you.
Yeah, hello. Am I visible? Yes. Am I visible now?
Yes, please.
Awesome. Okay. I got your question. Thank you for the question. I got it. So don't even stress. I got the question. Thank you. So that is one of the primary foundations of blockchain enthusiasts. We always want to look at the price prediction. So what I want to say is let's now look at the token statistics on CoinGecko, right? And let's do that together because, of course, I don't control price and I'm not the influencer of the entire market, which, of course, to give any price prediction will be based on my personal bias on assumptions. So I want to do that with you collectively. When you look at the market capitalization, we have 1.2 million tokens, right? And so far, per the use cases I shared, we, of course, would get to see a couple of adoption coming into the ecosystem over the period of time, at least till the end of the year. Now, we see the current circulating supply, which, of course, these volumes are locked away for a period of 5 years pending mining. So it would increase, but then it cannot increase beyond 5 million, even if it is to increase within this particular year. Why? Because of the nature of the protocol. And so when you look at this current market cap, the question is it possible for us to have somewhere around 5 million market cap? The question now is dependent on what you see as value on the project. For me, I see 10 million market cap as possible in the short term. And I also see 20 million market cap as possible in the short term, not undermining the fact that the current macroeconomics in the global space is facing a recession and a downturn. So you need to consider that. Now, if we need to have 10 million market cap, what would that translate into the coin value? Remember, the market capitalization is the total valuation of the current circulating supply as against the current price. So when you multiply 0.269290 by 4.711180, you would have 1.272805 million market cap. Hence, if we're saying that 10 million is possible, right? Then we need to do the math and find out what the capacity would be if we have 10 million market cap. Because as it stands, this project is very low cap. And that is what presents the opportunity as a blockchain enthusiast. What it means is that should we hit 10 million market cap with the current circulating supply, we are going to have $2 per coin. Now, the question now lies with, is 10 million even possible as a market cap? Then we go into blockchain and look at a couple of projects. This is the first 50. When you look at the market cap, let's exclude Bitcoin, let's exclude Ethereum, because they are coin-based projects. And let's go all the way down into looking into DeFi solutions. There are a lot of DeFi solutions, but because of time, we cannot go into it. It will take us a bit technical. Like I said, even the project on Alya, I could have taken you on to how the blockchain mining is done without the active participation of the developer team. So when you look at all of these projects, they are DeFi-based projects. Now, this is the first 100. This is 417 million market cap. Let's go to the first 300. When we go to the first 300, 90% of all these projects are DeFi-based. We have 80 million market cap. Most of these projects have an insane level of token supply. Most also don't really have solid marketing. And one of the interesting things I've seen in blockchain is that when there is a compensation and there's a motivation, the project is bound to skyrocket, because it does not only constitute the blockchain enthusiast, but it also constitutes the network marketing society. So adoption is bound to increase with consistent marketing from the developer team, and also introduction of serious use cases like that which I made reference to. And so if we've seen 80 million here on the first 300 projects, let's go to the first 500. Okay, once we go to the first 500, the market cap we see is 36 million. That is to tell us that to have 10 million is not an impossible feat in blockchain. So this is me being conservative on price. This is me being conservative, because once the bot goes live, hopefully by end of this month into the early weeks of next month, we will see the level of adoption. Let's all pay attention and we will test to this particular conversation some point in the future. But like I'm saying, I cannot be specific on what price could be. Can only assume based on analyzing what we have in front of us. I don't know if I've been able to answer you correctly.
Yes, sir. Very correct.
Awesome.
Thank you, Mr. Lambert. Do we have any other question? We have 1 minute. Do we have any other question? All right. If we don't have any other question, let's say a very big thank you to Mr. Lambert. I think we are going to invite you for another, a deeper session on this. Yes, Prince have, shared this with me for quite a while, and then he knows, my usual self, I would just take time and, to see exactly what it is that is being talked about. And then, yes, after he shared it, one of my friends, Mr. Daniel, shared it as well. And then, I said, okay, let's take a look and see what we have. So what we are going to do, we're going to invite you again, maybe in another 1 or 2 weeks, so that we can consolidate on this. And every other person on this call. We have to revert to our individual groups. And then, of course, I've shared this for everybody to partake or participate in. So I think about 2 weeks ago. So let's see how far, now that we have an understanding on how this plays and all of that. And for me, I think I love the auto bond mechanism that is built on the chain, which is something I think will make the project really, really fantastic. So, yeah, so let's see, and then we'll be able to take it up from there as we progress. All right. So thank you very much for this meeting. We really appreciate your time, and then I'll reach out to you through Prince Patrick, and then we'll take it up from there, sir. Thank you very much.
All right, sir. You're most
Yes.
welcome.
Thank you. Thank you. All right. Mr. Tony, are you on this call now? Mr. Tony, can you hear me? Tony, can you unmute yourself and let me know if you can hear me? Tony Huang, are you there? Tony, unmute yourself. Are you having difficulty unmuting yourself? Please, you can drop a message for me on the chat box. Let me know. All right. Tony. Tony, I can't hear you. Tony, can you speak up, please? I can't hear you. I think he's having some technical issues.
Can you hear me?
Roland, I can hear you. I can't hear Tony.
Okay, can you hear me now?
Yes, yes.
Okay, actually, I don't know. I can't hear anybody. I'm just seeing the video, but the thing is not speaking out. So I'm not following up.
Well, another session is about to start, so you will hear. Just hold on.
Okay.
Yeah.
Thank you.
Thank you. I think Tony is having a bit of technical problems.
Because I've been online and I can't really hear anything.
Maybe you did not enable your mic earlier, but it's fine. I mean, it's fine. Tony, can you hear me now? Tony.
Hello.
Hello. Yes. Okay, I can hear you.
I don't know why. Can you hear me now?
Yes.
I don't know why on my laptop it's not a voice. It's my phone. Okay. So can you make me co-host by Tony Huang and also your name? Yeah, let's check.
Oh, I love
See,
it.
also.
I'm hearing three different things.
Can you make me co-host by name Tony Huang? Sorry.
Okay. Is it developer you want or Tony Huang?
Tony Huang to share my screens. Tony Huang.
Okay. Just hold on. Samson.
Tony Huang. I can see developer, but I can't find Tony Huang. Okay, I've seen it. Done.
Tony, you are on now.
Okay, thank you so much, everyone.
All right. You're welcome. Oh, yeah, over to you. You are muted. Tony, you are muted.
Okay. Can you hear me now?
Yes.
Okay, I will use my phones to present for the everything. So thank you so much, Coach Ayabami. Thank you so much, everyone. And my name is Tony Huang from Vietnam. Shareholder and representative for the Paynetcoin business to develop worldwide. And thus, welcome everyone to our business. And the first, let me share my screens about the videos is about the Paynetcoin campaigns and about the ecosystem, FMC by exchange. So let me share my screen here. Oh, sorry, the network very bad. Sorry, wait a second. So my laptop lost the connection. Okay, ready. Okay, and this video is about Paynetcoin campaigns, and let's watch carefully for the first video. Thank you.
In a world radically shifting every day, the more up-to-date ones shall hold the key to the future. In the world where internet and digital transformation are revolutionizing people's lives, Paynetcoin has been created by a group of engineers from a large technology corporation and is expected to become the next generation electronic currency. Paynetcoin will be the leading cashless payment solution thanks to its speed, convenience, and privacy. Paynetcoin will be integrated into applications for tour bookings, online shopping, flight ticket payments, and conveniently.